All right, I think we got it. Got the chat on. Let me grab my coffee and we can start. How you doing? It must be a Friday. I got coffee mugs all over my desk. All right, so I guess we should get going. Let me find the music, turn that off. Meanwhile, let me know where you're logging in from. Where are you from? Where you at? I'll turn down the music. Here it goes. Very nice. Well, good morning, FX Street. Welcome to Trade Non-Farm Payrolls Live. Month 217 in a row. There's no way like Norway, like no way I know. Yeah. 217. Did you add that up? Yeah, that's 18 years and 1 month. How about that, huh? How about that? So, good to see you. Some of you have been to most of those. Many have been to many. And if you're brand new, good morning, welcome. My name is Wayne McDonell. I'm a currency trader, just like you. I gave up a really good job, what I considered my dream job, to become a full-time Forex trader. Yeah, it was quite a leap of faith. I had traded on a demo account for years until really I made the choice that Forex was paying me more than my great job. I was a venture capitalist. Gave me maybe more freedom. I worked a lot as a VC, so maybe I could only work, 18 hours a day instead of 22. But really, this idea of being independent and your own, managing your own destiny, it all very much appealed to me because I'm an entrepreneur. And really, I saw Forex as the most pure business in the world. Okay, the purest form. So like if you start a restaurant, well, you rent, right? You lease a facility. If it doesn't have equipment, you spend a lot of money building up the kitchen and building out the tables and chairs and making it look beautiful. And then you get up at 4 o'clock in the morning and you're at the door when the lettuce is delivered and, the parsley is delivered. Oh my God, we need some parsley, right? And so you're up super early, you work all day, you go through all these shifts, you manage all these people. And at the end of the day, and it's 10 o'clock, 10:30, and you're cleaning the kitchen and, having your cigarette after the long day. But you also need to be an expert in marketing and advertising to get people to come into the door, because if you buy $1,000 worth of T-bones today, you better sell every single T-bone. So now you got to get people in the store because you already paid for the meat. Now you got to get people in the seats. And why do you do all of this? Why all this pain and suffering? What's the ultimate end goal? Money. Hopefully you pay for all this. You pay for all your staff. Everybody gets paid. The landlord, the lettuce man, everybody eventually gets paid, right? Lettuce and cheddar. Why would you do all of this? Maybe you can make a buck or two at the end of the day. Well, why don't we just cut to the chase? Why don't you and I just trade money for the sake of money? That's what I mean by pure. We buy and sell money. We skip all the other nonsense. Isn't that cool? So I think it's the purest form of business in the world. But I ran into some troubles early on in that new career after I gave up my beautiful office and gave up the working with a big team and all that kind of stuff. And I was working on my own day and night, night and day, and the isolation got to me. Led to some depression. Depression led to poor trading results, and I had to have a complete reset. I either had to quit or I had to fix it. And so what did I end up doing is a business planning retreat, and one of the major things that came from that is that all my success that I had previous to Forex came from collaboration, okay? Teaming up and surrounding myself with like-minded, driven people. So it occurred to me on that planning retreat, oh my gosh, I need to get like-minded people around me. I need a community. I need a crew. I need a team. Right? And the only thing I could do at that time was tell you what I learned through my, at this point, blood, sweat, and tears for a few years. I figured a few things out as a trader on my own. There was no gurus, no books, no training. YouTube hadn't been invented yet. So I'm like, well, I will find people like me and I'll build a community. Yeah, and so since YouTube hadn't been invented yet, it was years before YouTube, I created an ebook teaching people my methodology for trading. And I sold it on eBay for $1. People would buy it. They would read it. And in the book, I said, you know what? I'll give you a 1-hour free consultation. We can talk about Forex. You can ask me anything you want. Totally for free. Let's just talk over Skype. I think it was Skype. It might have been in my Hotcom account. And from that, I shared everything I've known. So now, so if you skip ahead a few years, I start working with FXStreet. And so this webinar wasn't the first webinar. So this webinar, Trade Non-Farm Payrolls Live, this is 18 years and 1 month since NFP Live #1. But before that, I did a few others. So really, this is probably about year 19. And so that means probably almost exactly 20 years ago, maybe 21 years ago, somewhere in that is when I first started sharing everything I know. So good morning. After that, I did a lot of education, paid a lot of money for training, and educated myself in the futures market, commodities, for example, and got my Series 3 license and passed that exam, and the Series 34, and I think there was one more series. There's lots of series. So it became not just a futures and expert, but then a Forex expert, and that took a lot of training. All that was new to me, using options, using futures contracts. I learned how a grain elevator operator would, buy from a farmer and then hedge in the options market. That was, interesting, but completely foreign and exotic to me. And then later on, I spent 5 years at a little private school in Massachusetts called Harvard. Yeah, no, and the real one. Yeah, the real one. Full-time student for 5 years in my 40s. The point here is I value education. It's a big part. I actually miss school, and I'm always constantly looking to do something new. I was invited to go to Wharton. No, not Wharton. Yale. Sorry, Yale. And they're like, you can get a master's degree. I'm like, I already have a master's degree. But I almost did it, though. Seriously, I almost did it. I'm like, yeah, I should go to Yale for 3 years. My wife's like, no. But anyways, I love education. I love training. So I would like it if you and I talk technicals and fundamentals today. I'm going to use QuantBox. I'm going to use TradeRs. We're going to talk about the news results. We can do the volatility, watch that. But we have quite a bit of time today to discuss, the next thing. So if we do fundamentals, and then we do technicals, and then we do news vol and go through the markets and charts, and we do all of that, then the next thing is, how about we do something that directly helps you become a better trader? Like a tactic or a technique or a process. How many people like that idea where we can do something very specific? And of course, the squeaky wheel's going to get the grease. So let me know if you want to get greased up today. Huh? Grease lightning. Okay. I'm just looking. A few people from London, South Africa. Yeah, Belgium, logging in from the Ardennes. London, Colorado. London, England. Hey, man, if we can get enough people in London, I'd like to come visit you. Yeah. Let's do an event. I'd like to get to London, in particular with good weather. Let me know if we can get enough people together. Yeah, I would charge a fee large enough to cover my cost. Like that's it, right? But I can stay at the Oxford Club right there in Mayfair, and there's like 2 or 3 of my favorite cigar bars in London, like right there. So like I would go straight to the Oxford Club. Maybe we can have a meeting in the Oxford Club, which is super exclusive. We can get together. We can talk some trading. That's great. And we can hang out in an exclusive area. And then we can go have a nice cigar somewhere, huh? Yeah. Yeah, well, I mean, let's do it. I'm totally into it. I love me in London. And that area is great because you go down Jermyn Street and then you can get to Piccadilly, right? And then if you want to go get your bespoke suit, that's not far. Yeah. So help me. Help me, baby. Help me. So everybody okay with the agenda? Fundamentals, technicals, news vol, and then something. Yeah. Yeah, whatever you need. Well, and an audience and some money. Again, I'm not looking for you to fund my Lamborghini account. And then the cool thing is, and this is the cool thing. This is why you should get a Harvard degree and become a member of the Alumni Association. If you stay at the Marriott, I think it's the JW Marriott Mayfair. It's about 3 blocks away from the Oxford Club, right? It's something like 750 pounds a night and up for a Marriott. Okay, 750 pounds. It's not cheap. And up. That's for the tea-stained basement, no view window, right? You're like, wow, dude, seriously. And the Oxford Club cost me something like 220 pounds. Like, It's for poor people. It's like a homeless shelter in Mayfair, for those that have Oxford degrees. So, anyways, let's do it. And Brad, I don't know if you know where that is, but right next to it is the what is it? What do they call it? The Automobile Club, like an old private club. Right around the age of bespoke cars, But anyways, maybe we can cruise over there as well. So anyways, let's get on with it. So quite a few things I want to point you to. The way that I start my relationship with new traders is they go to investorbootcamp.com. This used to be labeled FX Bootcamp. And about a year ago, on the 20th anniversary of FX Bootcamp, that's my relationship with FXStreet, I had FX Bootcamp for 20 years. And on the 20th anniversary, I rebranded it Investor Bootcamp because I want to talk about more than Forex. I have a lot of education in real estate, both, sort of retail and industrial or institutional type investing into real estate. So I like that. But I like gold. I like oil. I like, almost anything, trading gold, all that kind of stuff. I love macroeconomics. In fact, my bachelor's degree at Harvard is in macroeconomics. I did get the degree and I graduated with honors, cum laude. So that's actually written on my degree. So I love macro. That's what QuantBox does. But if you don't understand macro, then QuantBox is difficult because you're like, I don't get this GDP, PCE, CPI, PPI, all this stuff. Okay, so this is where you should probably start. If you love oil, for example, this oil investing fundamentals, if I may say so myself, even though I designed it, I spent about $5,000, I'm guessing, building it, because I have a PhD that works with me to do the data visuals. But nonetheless, this is probably, again, 15, 16 hours long. It's really, 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 really good. It's really good. Okay, the macroeconomics is really good. This is, if you have let's say you do have a degree and you did take a macroeconomics class from your university, this covers some of that, if not most of the subject of not just sort of macro 101 or economics 101, more advanced than that. This is more like an intermediate or advanced or maybe graduate level class on economics. Like, no joke. Stuff I pulled right out of Harvard. No joke. But what I did is I did the whole thing without the calculus. There's no calculus. Okay? There's no calculus. But I'm telling you, like, this stuff is, I put a lot of effort into it and it's no joke. It's not like much of the stuff that's out there. Okay? Each one of those is easily $1,000 course. All of them can combined, all of those, there's like 100 hours of training. It's $88. That's where you should start. I mean, it's so dumb. It's so cheap. It's so dumb. Okay. Honestly, the oil trading course is worth $1,000. The macro course is worth $1,000. Right. The central banking, if you don't know anything about central banking, this is your foundation. This is 15, 16, 17 hours long, something like that. And in fact, I need to update this because when I did this course, it was true. Now, part of this actually isn't true anymore. The Federal Reserve Bank of the United States has changed its policy management tools. So I am going to the St. Louis Fed later this year and spending 3 3 days, I think, working at the St. Louis Fed and being updated, basically taught the new strategies. Yeah, which is kind of interesting. Now, why would I take 3 days out of my life, spend the money to go to St. Louis, get the training, and write it all down? Because I'm going to come back and I'm going to update this course and I'm going to teach you. And I think we could probably do a meetup in St. Louis and get some ribs and listen to some jazz. What do you stink? Smell like a plan? Cool. Yeah. And then this one, Principles of Price Action. Actually, our good dear friend David Pegler has popped in from time to time. He might be here today, but he's popped in a few times recently. I'm like, hey, Davey, DP. I'm like, hey, would you be willing to come back and do a new version of the price action course? He's like, yeah, whatever, man. That sounds good. So I gotta like drive up and take him out to dinner or something and make sure he does it, to his disarm, although he could probably beat the crap out of me. But he's the nicest guy you ever met, so he's nice. So he won't beat the crap out of me, but he probably could. So anyways, yeah. Yeah. So let me get some charts going. We'll have that in the background, but this is where I typically start the relationship, you and I, us. So, in fact, most people in this webinar have already done all that. So I'm talking I'm talking to people that have been members of FX Bootcamp for years, even decades, right? Remember, boot camper for life, right? How many people here consider themselves a boot camper, even if you're not a member today, but you're like boot camper for life? How many people got the boot camp love, the blood in your veins? Oh yeah, Jim, absolutely. Yeah, I think Jim is the cornerstone. Yeah. Yeah. Boot campers for life. Never leave a boot camper behind. Yeah, Henry. Yeah. JGB for sure. Yeah. Victor J. It should be Victory, huh? Yeah. So anyways, good. All right. Another tool we're going to use today, excuse me, QuantBox, how about this? I'll just summarize it this way. QuantBox is a virtual assistant that does quantitative analysis for you. A quant will cost you $200,000 a year, and the quant will need access to like a Bloomberg terminal or something, right, to do research, or some database that Harvard's got. And here's the thing: that platform they need to do their research is $2,000 a month. Okay, so you hire a quant, it's $250,000 a year to get the data. QuantBox is $80 a month. Okay, once again, incredibly powerful, stupidly cheap. So if you don't sign up, there's just literally a disconnect. And that's probably my fault. But money should not hold you back from your destiny. It's like $80, you're like $80, I can't fulfill my destiny. Really, dude? 800 would be cheap. But anyways, let's go to that. A new service that I started about 6 weeks ago has far surpassed my wildest dreams. And so this is a service that is your virtual assistant that does technical analysis for you. As it says here, it analyzes technically 7,500 charts in real time. Okay. It looks for the 12 best It's actually looking for 15. Some are kind of similar. That's why I say 12. So 12 unique trading patterns. But also it looks for patterns that are momentum patterns and not sort of like a reversal pattern is a reversal pattern. And the pattern itself is the opportunity. But then there are like Fibonacci type patterns. So literally Fibonacci, a dip predicts a rally, or a Gartley, right? This, that, and predicts directional. But that has to do with the momentum. And it's not a pattern that you can measure properly and get a real statistic out of, because it's just, again, essentially throwing money at a trend. But it's not really a pattern. It's kind of a process. How to buy a dip, for example. Okay, so it does it, but I don't include it here. But the reason I say the best trading patterns, how do I know best? Like, best is an important word, okay? It's best, and by the way, I'm going to put a presentation together for everybody to show you, but I'm putting together the presentation now. But using TradeRs, I looked at 27,804. 27,804 patterns that TradeRs has seen this year. Not since January 1st, but in the last 365 days. That's how many patterns it's seen. So, different time frames. Okay, that's just Forex, by the way. Okay, but amazing, right? But it watches the market before the patterns have formed, or as they're forming, and then it watches the market after they've presented. So it's not like a tool that just draws patterns on your chart for you. It's watching before and after the news. Do you understand this is millions and millions of candles? It's watching before and after every pattern and remembering. And because it watches after, 2 hours after, 4 hours after, 2 days after, it's watching. The processing power is extraordinary. It's right? It's extraordinary if you think about it. You're like, dude, it's watching the 15-minute chart, the hourly chart, the 4-hour chart, and the daily chart, and it's watching it for, up to 2 days just to remember the pattern? Yeah. And it saw 27,804 patterns? Yes. But because it's watching after, we know whether the pattern worked. So, for example, what is a head and shoulders pattern? A reversal pattern. So every time it saw a reversal head and shoulders pattern, it then watches to see, well, did the market reverse? And did it reverse on the 15-minute, the 1 hour, the 4 hour, or the daily? Okay. And so we know, and I can tell you whether it worked 77% of the time, 82% of the time, 61% of the time. I can tell you precisely. So like one pattern that I'm looking at right now, I'm not going to tell you what it is because it goes into the presentation. But TradeRs in the last 12 months saw this pattern 1,942 times, of which 1,195 times it worked for a 62% accuracy. But, okay, here's another one. Another pattern, 7,445 times we saw this. Now, you only need 30 examples to be statistically relevant. So for this one pattern, there's in the data set 7,445 instances. Okay, and it worked 76% of the time. 5,638 times it did what it was supposed to do. It's extraordinary, isn't it? So we will use this tool later today and help us analyze non-farm payrolls. Cool. But extraordinary data, right? If you're going to use this, good training, good fundamental research, good technical research, you're going to need an ECN. I'm in the wrong browser, aren't I? Yeah. You're going to need a good ECN. I don't own this company. A lot of people think I own this company. I don't own it. But they are good people. And it is a good service. And it's an ECN, which means they do not trade against you. Most brokers trade against you. Okay, here we are. Okay, what this means is when you place a trade using straight through processing technology, your trade goes into a liquidity pool, right? And you're matched against Goldman Sachs or JP Morgan or Mitsubishi Bank in Japan, that kind of stuff, right? Most brokers, what they'll do is they're really just dark pools. You're just trading against another trader. The broker just assumes and in fact expects or even desires that you lose. They treat you like you're stupid, and they think, well, client A they're going to blow up their account, and client B, they're going to blow up their account. So they never actually execute your trades. They just match idiot trader with idiot trader, and they know. And in fact, the business model is based on that. Eventually, trader A and trader B lose money, but the money never leaves the broker. So if they each put $5,000 into an account, and over time, over 2, 3, 4, 5, 6 months, they eventually lose money, then the broker keeps the $10,000, and that's how most brokers work. Trader's Way executes your trades. So it's a symbiotic relationship. They win if you win, and stick around and become a good client for years and years to come. And that's how they work. So if you like the symbiotic relationship with your service provider, well, you need an ECN, and I recommend Trader's Way. Pretty simple, right? Oh, you like the suit? Yeah, I got another board meeting today. Does it look all right? I don't see the camera. Oh, there it is. I wasn't sure about the tie, the gold tie. I don't know. It's a little... See, I've been having my suits made like super tight because I've lost so much weight. They're like leather gloves, like O.J. Simpson's leather gloves. Yeah. All right. Let's see if I log in. I think I'm in the wrong browser. Oh, no, it might let me in. So here we are. This is QuantBox. QuantBox is easy, and yet it's complicated. Okay, it's easy, but it's complicated. One way to make it super ridiculous easy is after you become a member, so you paid the $80, you can upgrade your account here, okay? For $1 a day extra, I built AI. It took 6 months, by the way. Like, no joke, that's how complicated it ended up being. I didn't think it'd be that complicated, but, AI is complicated. So what it does is this is a second AI that reads the analysis created by really truly algorithms, but the other one to read is a little closer to AI. Now TradeR's is AI for sure, but what that $1 a day upgrade does, for example, is it watches some of these charts like this. And this compiles a lot of different data. So we can do like gold, for example. And so we're watching interest rates, the labor market, inflation, GDP, statistical analysis of price time data. It's not doing what TradeRs does, but it will tell you if the trend is up or down. And we do that with the formula Y equals MX plus B, and then we do linear projections and all that kind of stuff. So nice. Seasonality, which is the 20-year average, retail sentiment, institutional sentiment, and then we score it. And then from that, we can produce an up or a down. Okay? But then, so that gets us to a score. And then these are the scores on the charts over time. So the score today is a 3, and we're here. But it was different yesterday, and it was different before. And what's interesting is this is one process of watching several different components built in or throughout QuantBox. And now it's combining the score in the past. This dotted line is actually what gold has done. That is the price of gold. That's the gold chart. And then you and QuantBox's score. And so this is a way to call bullshit on QuantBox. You're like, right? And you can go back in time and see how the signals produced, like how the market responded. So right in here, QuantBox went bullish, and it stayed bullish for a very long time. And you notice when gold kind of was continuing to go up, it slowed down exponentially. QuantBox was already flat in here. Like, it's mostly over, it's mostly over, it's mostly over, it's mostly over. Okay? So who knows? Maybe today there's rhyme or reason because we have a 3. It's not quite there for buying, but maybe this pullback is over and maybe we start accumulating on the way up. But what I was getting to for the dollar a day thing is because there's so much information, it's hard to watch everything, even with the help of AI. But, and I don't know if you can see this, but I get messages sent to my phone and it says, okay, new alert, strong bearish Kiwi dollar. It went from a -8 to a -12. It's not focusing, but I think you can see it. Okay. And then you go here, why? And there actually, you see there was a Kiwi dollar and a Kiwi Swiss franc. The trend turned bearish. Kiwi dollar went from a 2 to a -2 on the trend. And Swissy is flattening out. It went from a 2 to a 1. And it's telling me what's happening from my phone. And that came to me at 3:02 a.m. And obviously 3:02 a.m. for me is London Open. So London Open bearish and changed things. And QuantBox updated. And then updated me. And it's doing this. It's reading it. It will read the COT report for me later today and send me a message, send me a summary. So in the past, when I first started trading, I'd spend 4 hours, easily 4 hours figuring out the commitment of traders report on the weekend. Easily 4, 5, 6 hours. It now takes me 10 seconds. And to get the data and to analyze the data, I paid probably $300 a month for some software. QuantBox does it. It just does it. This would cost me $300 a month. Okay? To know that there's a 7% bullish change in the Japanese stock market, copper, silver is up 2.3%. That's the flow of capital week over week by institutional investors. Okay, money came out of pounds. See, I know that. I know it. I see it. It's so easy. It's so beautiful. It's so clean. I can tell you the change in numbers of contracts, and I can rank them by how much they've changed. So this is the negative flow of capital. Okay, 23,000 less bulls and 11,000 more bears. Holy schnecker schnacker. And now it takes me 10 seconds to do this work. Extraordinary, isn't it? If you're not adopting technology into your trading, you are going to be left behind. In fact, you're being left behind right now. You should be standing, you should imagine you're standing on the train tracks watching the caboose get smaller and smaller as it travels away from you into the sunset. You're just gone. You're on the ice floes flowing away from the village. You're just gone. You've missed it. Okay? You're like that funny-duddy old person trying to figure out how to use their phone. You're the fuddy-duddy Forex trader because you don't know how to use technology. You should fight. You should rebel. You should adopt. You should do whatever it takes. But if you're not doing things like QuantBox, you are being left behind. Things like what are the central banks doing, Wayne? What's your thoughts on that? Well, I have data. I don't have thoughts. Like, I don't have opinions. There's no need for me to have an opinion. So, like, what, the Bank of England's going to have an interest rate decision next week? Okay, cool. I can tell you what their expectations are. Okay? Here's their inflation forecast. This came from the Bank of England. Where do you get your data? The Bank of England, in regards to the Great British Pound. Can I get a better source than the Bank of England? No. Okay, this is their projection. So now I could look at, based on the second quarter of 2024, where's their actual inflation right now? And what did they think it would be? If inflation is lower than 2.5 in the UK, then they are highly likely to start cutting interest rates. But if inflation in the UK is higher than 2.5, it's very unlikely they'll cut interest rates. So I don't have an opinion. I just know. They've told me. Why would I need to guess? And you get these experts all the time that when they're asked a question like, is the Fed going to cut, or is the Bank of England going to cut, and where do you think this is going to be at that time? They give you opinions, which are just guesses. Doesn't matter if they manage $10 billion. They're just guessing, and it bothers me. I'm like, why would you listen to this idiot that is guessing? When I can just tell you, well, okay, the Bank of England thought we'd be at 2.5. We're well above 2.5. There's no chance of a cut. Okay? And then as that comes through, this is the chart here. This is the Bank of England. They have already told us they are not going to cut this year. Now, maybe this will change, and it will change. But if somebody asked me an opinion, no, I don't think they're going to cut. That's not an answer. That's nonsense. I could say, well, according to the Bank of England, data that we pulled from the BOE, it is currently forecasted to cut interest rates for the first time, okay, in the first quarter of 2025. It's not a guess. It's not an opinion. It's factual. And then I can do comparative analysis of currencies against each other. So the Bank of England is likely to go, right? And drop it down. Right now, projected by the end of 2025, they'll be just above 4.25 kind of thing. Okay? So the number of cuts. Japan's actually going to raise interest rates. Whoa, see? Again, this is where when experts, they get on TV or they get on Bloomberg radio and they're asked, will the Bank of Japan raise interest rates? And they get squirrely. And it's very clear they don't know and they're just guessing. I can say, well, I actually have this projected out on a chart based on what the Bank of Japan have already told us. And this is what they've told us. Okay? Will this change? Oh, yeah, probably. And then we will update the chart. But there's no like quant box is guessing. This is not a quant box projection. This is a Bank of England projection. Isn't that amazing? So now you know, you're factual. You're an expert. Okay? You know. You are informed. You are the smart money in the room. Okay? Yeah. So that's when you can do things like organize your thoughts. You're bullish on these things. Oops. Where's my... Okay. And you're bearish on these things. Why? Yeah, well, that's the most important question as a trader. Why? Well, you've analyzed institutional positioning, retail positioning, seasonality, technical trend, GDP, inflation, jobs, interest rates, and then took all this data for Great Britain and New Zealand, did a comparative analysis of the two, and which created a score favoring pound over New Zealand. And then you did the same thing. You took data from Australia and compared it to data in New Zealand, did a comparative analysis. You favor Australia. Then you did it again. You took New Zealand data, compared it to European data, did a comparative analysis, created a score, and favor Euro over Kiwi. And you're making logical, intelligent decisions. So it's a radically different and better way to trade. It's the way that institutions trade. Okay, you see all this? These are all the technical trading plans that are forming right now. 3 hours ago, 2 hours ago, 1 hour ago, 9 minutes ago, pound yen up. Okay, there's the pattern, there's the break, there's the target. But I don't want to show you that. Yeah. Oh my God, though, right? And that was just for Forex. Okay. In 5 minutes and 5 seconds, we have this coming out. Non-farm payrolls. So, again, I don't have thoughts. I have data. Okay. If the actual is less than 243,000, this is how the market is expected to react based on how it reacted to similar results in the past. Not the headline number, but less than expected. AKA a bad number. Okay, whatever. You understand? So we've gone back and looked at a minimum of a dozen non-farm payrolls that were less than expected. Watch the market hours before and watch the market hours and hours after. So it's the before and after, and remembered each and every instance of what it did before and after. Because this way, if it goes up, but you knew 70% of the time it ended up falling over 4 hours, then you would wait for the green candles and then sell it high. You would wait for the up and sell it high, or vice versa, where most people just chase direction. Okay? Now, what happens if it comes out greater than 243,000? So we look at all of this. Again, this is the past. I call these sonars because radars look to the future, what's coming. Sonars are like look down below you, so the past is how I break that out. Plus, they're similar words, so I think you figured that out. So, like, for example, if it comes out, if non-farm payrolls comes out greater than 243,000, then 77% of the time, 78% of the time, there was a 2-hour scalp on Aussie dollar. a 2-hour scalp on euro dollar, but not on pound dollar. 2-hour scalp on Kiwi dollar, 2-hour scalp on USD CAD, but up. Everything else was down, so we're following dollar. It shows like greater than creates a strong dollar. Okay? A 2-hour scalp on Swiss franc, but no follow through. So the other ones have follow through, 12 hours and stuff. USD yen, 2-hour, 4-hour, 12-hour, and 48 hours. So in the past, it created a scalp, a spot, and a swing trade. A scalp, a day trade, and a swing trade. Oh my God. But today, and look at some of the accuracy here. 89% of the time, it worked on a 4-hour. In the past. Now, past performance does not predict future results, but at least you know the past. So anyways, so you can then look at things and say, well, I don't want the euro dollar. I might be into Aussie dollar. I might be into Kiwi dollar. So you're like, okay, so a Kiwi dollar short in that situation. And then it breaks it down. How beautiful is that? If it's actually less than, up. If it's greater than, down. And then I say, well, show me. If it's greater, show me all the scenarios. And, in April, straight down, closed lower. In March, up, and then closed lower. February, down, closed lower. December, down, closed lower. September, up, and closed lower. Down, pull back, closed lower. And we have all this data for that scenario. So you either got to be quick on the draw. If it's turning red, you want to be sort of on the 1 minute or 5 minute candle. But if it goes up, you can sit tight, find the next level of resistance, and then wait for it to roll over. Because even in instances of up, right, 2/3 of the time it closed lower. So you either scalp the bear vol, or you wait for it to top out on the bull vol and then sell it off resistance high. And you know you can let it run. And we also have this data, of course, on all these pairs in both directions. It's extraordinary. So let's go to FX Street. They have the best calendar. They have the best calendar in the industry. So thank you, FX Street. What we really care about besides a headline number, that's going to give us our daily vol. But as far as follow through, we're interested in the change of wages. We're interested in wage inflation. We're probably going to stay at 3.8. Nope, 3.9. That's good. Okay, that's good. That's nice. 3.9 is welcomed. The market might like that. Better than Apple getting all their executives rich before they tank the company. Still no number, huh? It didn't print. I'll refresh just in case. $1.75. Okay, it didn't print for some reason. Okay, so that scenario is definitely less than. And we looked at some of these things, and we probably, what do you want to do, pound or, well, this is just a short-term scalp. Aussie might be better. CAD might be better. Yen might even be better, huh? So we'll take a look. We'll come back to that in a second. Sort of good news across the board. Unemployment went up, and the number of jobs was significantly less. Like we were printing 300,000. Now we're less than 200,000. That could give the green light to the Fed for a September cut. Okay, so I wanted to move over to the yens and see how they're doing. Yen is strong, and you compare a weak dollar, and you have this move. So we'll drop to a 1 minute. And I don't know, can you tell? Down? Yeah. So we can go to we'll go back to the traders and say, okay, what happened in the past? So I have here with USD yen, and we're looking at 75% chance that the 2-hour trend will be down. But I can go further back and say it's not just 2 hours, it's 4 hours as well. 75%. So I say, give me, the past here, 75% chance of down. We had a giant red candle. Then we fizzled out for an hour and a half to 2 hours. And then you can take a second shot on the pullback. Okay? But it seems like, even the up and then the down, it seems like you probably want to be on this sooner than later. So if you can get a 1 minute or 5 minute pullback, this is a 15-minute candle, then you probably want to get short inside of this candle. Okay? Past performance does not predict future results, but we have some data into the behavior of price action in similar circumstances. Now, in standard technical analysis, you would look for something like that. But I think we will have to be a little quicker than that if you're going to scalp this. If you're not going to scalp it, then whatever. Okay? And you can already see, not much of a pullback, but we know that having analyzed the 15-minute candles in past scenarios, like what we just got, the first 15 minutes was definitely solid down, right? So solid down, solid down, solid down, up, solid down. So solid down is in the play. So that's where through data analysis. Remember, you're not guessing. That's too amateuristic. Based on data analysis of the volatility created on USD yen, then you need to be quick on the draw. Cool. Okay. Now, what about the next level of analysis? Well, I can go out and say, well, what about 2 days after the news event? Okay. USD yen dropped down and rose. USD yen, now these are hourly candles, so it's upgraded the analysis. Different chart because it has to look further out. It dropped for 2 hours and then up. This one dropped for 1 hour and then up. Okay? Yeah. So no follow through. Okay? Isn't that interesting? Isn't it nice to know? So break it down. Scalp. And over the next 4 to 12 hours, closes lower than the initial news, but 66.7% of the time, 2 days, 2 days later, we're back up. So you see what I mean? So there's a down for today, and then by Monday or Tuesday, this is back. So you can decide now. You can scalp it down and pick up some pips, or you can buy it later today, low, or Monday low, and have it go up. Now, in the past, when we got this data, we didn't have central bank intervention. So that may change things, right? This time will be better than the last. Yeah. So just pay attention, but we do know what happened in the past, and that is what happened in the past. So now notice I'm on this page, Non-Farm Payrolls, It knows that the actual is less than consensus. It erased, this is traders now, erased all the other data that used to be on this page. Did you notice that? There's no greater than anymore. So now it's only this data. And so when we look at the scalp on euro dollar, okay, it shows the plan. Okay, isn't that nice? News, closed higher. News, closed higher. News, closed higher. Isn't that nice? Do you understand that we have all of this in memory? Going back years worth of data on every major news event. And then following the news before and after, up to 2 days after a non-farm payrolls event. If you know anything about technology, you know that is extraordinary. The amount of money and processing power, right? So if it takes processing power, that's equated to money. It's like you have to eat several times a day, and there's a cost to the energy you put into your body. You have to pay money to buy food. I have to pay money to get this to think and to remember and to learn. And when you're talking about millions of candles, it's truly something that a human mind can't grasp. But you should say, oh my God, with a click of a button, I can bring up the January 5th, 2024 euro dollar non-farm payrolls chart. Just like that. How about May 23rd of last year? It was 180,000, 253,000 expected. Okay, negative delta of 73,000, and I can show you the chart. There it is. Wow, 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 wow. Okay. So Arve actually took the scalp. So let's analyze that quickly. Save me from myself. Okay. Cool. And what did traders say? Well, there was no reliable data on the higher time frames, so there was only a scalp, and it said 100% chance of up. Okay, to be clear, it's not chance or probability. In the past, euro dollar 15-minute chart in scenarios of a negative delta, which means the headline is less than the expected, in every single instance over the last 12 months, it went up in this situation. But, and that's a big but we also know that there is little to no confirmation of what happens later. You get your 2-hour scalp, and then there's no reliable patterns on the other time frames. Is that useful information? Yes. So that makes you look at this zone a lot different, where you're like, okay, what traders just told you is not only would it go up in this situation, but there's no reliable pattern if it's going to continue up or continue down. There's no reliable pattern on any time frame. What does it probably mean to you? It probably means, now combining other technical analysis, okay, a bottom here predicts a top here. So somewhere around 108.21, you should take profit. So you do you. Because if it said, well, 70% of the time it continues up for another 4 hours or another day or another 2 days. It doesn't say that. So if you made money by buying it earlier in the week, or you bought it yesterday or earlier this morning, okay, then you should probably be taking your profit and enjoying the weekend. Not because you're afraid, but because you have the data that tells you that that is the right strategy based on past performance. Come on, man. Give me some love. That is good data. Oh my gosh. That is incredible. Now you don't have to bite your fingernails. What should I do? What should I do? What should I do? You already know. Okay? There's 100% chance of nobody knows. There's no reliable pattern to say, stay in, brother, stay in. There's none, a 0% reliable pattern. So you might as well just take the money and you're done. Have a nice weekend. Thank you for dropping by. Okay? You see how you can push through the dataless bearer? Okay. KG is like, hey, what about the initial? Well, we know, for example, this big move tends to be within a 15-minute candle. So again, we go back to TradeRs, and let's pull up euro dollar again and say, show us the pattern. Okay, it came up. Okay, it came up, fizzled down for a half an hour, and then kind of came up and double topped and closed a little flat. So you would need to be inside that 15-minute candle to make any real money on this. Meaning you had, like, if you're lucky, you caught it in a minute. And if you're unlucky, it just produced nothing for you. That's why very often you have to be or before the news, not after the news. Because also your spreads are likely to increase and stuff. So what you want to see is on a 15-minute candle, let's do it, right? You get a big candle, and then it comes back inside the first, right? Okay, so imagine now the first candle actually looks like this. So you get this kind of thing. But at one point, and now I got to change the size, right? At one point, we were up here. Okay, can you visualize a candle that looks like this? And we'll make it a green candle. Just, I don't know. So it's a bullish candle. Oops, now I got to make that fat. Okay, it's a bullish candle. But we were way up here. So that's the high. And then it came back, and at the end of the first minute, we were here. That's what creates a wick. So you probably, and often what I'll do is I'll fib this, even just visually in my mind, I'll fib it. And I'll say in my mind, okay, this is about a 50%. This is about a 618. This is about a 382. So if I can get it, if I can get long here and put my stop here, I'll probably be okay. And it's fast, brother. I mean, you might have seconds. That might take 10 seconds. So you get the big green candle, and then down, 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 down as it hits sell orders that people put in the market first. And then it dropped the 50% on the initial spike. Buy it. It's in my book, by the way. And I also wrote an article, a very, very, very detailed article on FXStreet on how to do this stuff. But we can take it further and say, we know we have to do it quickly. What I've seen in the past on other news events is that very often a half an hour after the initial news event, a pullback trade sets up, and you can kind of get a day trade out of it. And what that means is, like, for example, let's say today's NFP takes us up, so you have a big bullish candle for 15 minutes, okay, and then another one. So for a half an hour, you get, all this bullishness. I guess I should do it in proper colors, right? Okay, so a bullish candle and then a bullish candle. But then what if you knew 75% of the time it does sort of bearish, 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 and then followed by bullish, 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 bullish. So 1 hour, 1, 2, 3, 2 hour, okay, and 3, okay, and kind of like that. So on a 4-hour chart, you have a half an hour up, almost an hour down, right, and then a second wave. But without the crazy volatility and wide spreads and all that kind of stuff. So you could say, well, I'm going to buy a dip after the news. That could be your plan. Okay? And you add one here. You add another here. And then, right, traders will go out as much as 2 days to tell you where this typically goes. But you could look at it and say, I'm going to skip the scalp, but I'm going to take the day trade. Traders does that with factual data. And you can see it. This is one little tiny component of traders. And trust me, it's extraordinary. So the way to use it is to say that you're a boss, you run a hedge fund, you manage a dealing desk, you're the portfolio manager, and you have 2 assistants. So when you walk into the office, you meet with your quant, and your quant updates you and says, hey boss, I've been looking at all the macroeconomic data. Some things have changed overnight. Let me tell you, I'm still bullish on these pairs, which means I think you should sell the New Zealand dollar. Because, okay, sell the New Zealand dollar versus pound, sell it versus Aussie, sell it versus euro. But on the flip side, okay, sell New Zealand versus yen, sell New Zealand versus dollar, sell New Zealand versus Swiss franc. So, hey boss, I really think you should consider selling New Zealand dollar today. And you're like, cool, thank you for the update, appreciate you. And then you have your other analyst come in, and this is your technical analyst who's been watching charts overnight while you've been sleeping, been watching 7,500 charts. And you say, okay, what's going on in the world? And they start reviewing the few setups. There's maybe a dozen setups that have occurred overnight. It's not many. But remember, analyzing 7,500 charts, getting down to the dirty dozen that you should focus on today is pretty cool. But then you're like, okay, I met with my quant, and my quant suggests I only sell Kiwi. So tell me what the New Zealand dollar is doing right now technically. So we get rid of everything that doesn't have a Kiwi on it. Okay? And so that's only 2. So we update. So Kiwi dollar, Aussie Kiwi. Okay? There's no other crazy crosses, right? Unless I missed one. There's no CAD Kiwi, is there? Did I miss one? No. All right. So we hit save. Okay? And now we get down to 3 potential trade setups, one on a 30-minute, one on a 60-minute, one on a 4-hour, or is that daily? Over daily, okay? Now, are we, according to the advice of our quant, should we be buying New Zealand dollar or selling New Zealand dollar? What did our quant recommend? Sell Kiwi dollar. Okay? And the cool thing about it is QuantBox is economically very bearish, but is recognizing that it's currently in an uptrend. So at some point, okay, when that changes to technically bearish, the stars will be aligned and you get short. And you can look like maybe you prefer Kiwi CAD. But QuantBox is neutral. What about Euro Kiwi? Okay. It's bullish, but the trend is down. So now is not the time, but maybe soon. You see how to play this? What about pound Kiwi? Okay. And this one's neutral, so pound is not much better than New Zealand, so you don't want that. Did we do Aussie Kiwi yet? And you're like, okay, this seems cleaner. Okay. Technically, it's up. Institutionally, it's up. Retail, it's down. Look at this. 82% of retail short. Dumb money. So that means long. Technical trend is good. So one of the cleaner trades is Aussie Kiwi, right? So anyway, so you're like, okay, you're analyzing this all fundamentally. That's all, even the technicals is fundamental because it's really statistical analysis, not true. Like it's not looking for patterns. And so anyways, we want to sell New Zealand dollar. And on the 30-minute chart, 3 minutes ago, Kiwi dollars got a bullish trade plan. Does it mean you do it? No. It could be the dumbest idea ever, but it's happening. If we breach this 60 level, it'll pop up somewhere between 60.22 and 60.75. Okay, but look at what QuantBox is saying. The trend is up. It is moving up, and it's projected to move up. Can make it a little nicer to see. Okay. The trend is up. Trend reading 2. Strong upward trend. But don't believe the hype. As an equal, can I get this through to you? My 98s are booming in my trunk with funk. All you punks can't stop my dunks. Yeah, so it's bearish, bro, but it's going up. So if or when this rolls over and becomes technically bearish, you are likely to do fairly good because now fundamentally and technically you have congruency. So I look at this because I'm in boss mode and I asked my technical analyst, I said, so what did you do all night while I was sleeping? Sir, I watched 7,500 charts. And I saw 12 trading patterns. I think you should consider. I'm like, yeah, but I'm only interested in Kiwi today. I met with my quant. My quant says focus on Kiwi. So what do you got for Kiwi? Sir, I have 3 trade plans. Focus on Kiwi. 1, 30-minute chart up. I'm like, yeah, I'm not interested. Pass. Aussie Kiwi, 1-hour chart down. Oh, that's very interesting. Technically, that makes a lot of sense. I'm going to pass. Not interested. I don't want to own Kiwi. Sir, out on the daily chart, I see a Kiwi dollar short. Really? Yes. Why? Okay. Channel down identified 3 days ago. This pattern is still in the process of forming. Possible bearish price movement towards support of 57.51 within the next 5 days. Now, when it produced this chart for you to see, it's been updating the chart. Okay? It's been updating. So since it came out, it had a red candle followed by 2 green candles. So one of 2 scenarios is likely to happen. The downtrend is about to end. We break through the bearish channel and it starts making higher highs and higher lows. That could happen, right? Because you could say, well, gee whiz, it could happen. Anything could happen. I hate that answer. That's dumb. When somebody says anything could happen, that just tells me they don't know what's going on. So I would say, well, based on fundamental analysis, that is not likely. So I can use this area that we're at, which is basically 59 to 60, and say these are going to then turn bearish. So I don't even really need my chart. Here's what I can do now. This is only confirming what I already thought. This is already 3 days ago on a daily chart. It's much longer term than a 30-minute chart. 30 minutes are used for kind of scalping and day trading, right? The 15-minute chart and a 30-minute chart, sort of day trading, intraday trading, very shorter term trading, right? So I can just ignore it and say, I see it. The patterns that you have produced for me, virtual technical analyst, right, are correct, but I'm choosing as boss to pass. Because my quantitative analyst says bearish. Much more likely to be bearish on the long run. So here's what you do. I can sit here now on this page and I can wait to see trading patterns like this go from bullish to bearish. I might have to wait a whole day. I might have to wait a half a day. I'm not in control of that. But here's the thing. I have somebody watching the 15-minute chart, right? The 30-minute chart, the 60-minute chart, and so on and so on. Right? This is a 4-hour chart. Okay? No, wait, that's daily, isn't it? Yeah, okay. Anyways, I have an analyst already watching these things. But then you're like, but I don't know which one to trade and all this. Okay, great. Well, it's looking for minimum 15 patterns. There's a few other sort of momentum plays. So you might get like a Gartley bat pattern that suggests down. But the thing is, you just sit and wait, and it's likely to occur on the shorter time frames first. But when or if traders over the next few hours or next couple of days says bearish, you see? Suddenly you see bearish selling patterns for Kiwi. It's time for you to go from boss mode to trader mode. You start buying, or in this case selling. You start selling Kiwi, and because maybe the analysis shows you longer term trends, you would be able to accumulate a position of net short Kiwi dollar. This is a much more professional way of trading. But now notice that you're trading in the future. Imagine you have all this together. And all your trades start with a fundamental bias based on macroeconomic logic. Imagine that. Is that professional institutional style trading? Yes. based on your comparative analysis of macroeconomic data across global economies, you make decisions. And from that, you create a bias. So you are short NZD based on comparative analysis of macroeconomic data. Okay, great. Then you have your technical team set up trade plans for you. Huh? And you wait for congruency. So your net short, this says long, ignore it. This says short, okay, ignore it. This says short, love it, but that only confirms what we already knew. So now on the smaller time frames, you're waiting for this to happen and this to happen. And when they do, guess what? All your trading is going to be when there are bearish trade plans in a bearish trend. The trend would be analyzed, again, macroeconomic data, but also this. So let me show you, let me zoom in a little bit. So Kiwi dollar, right? Okay, so part of your analysis is this. Should I sell it now? No. But QuantBox is bearish. Another day passes. Should I sell it now? No, probably not. Okay, these are daily candles. That's the 20 moving average. But maybe by next week, okay, maybe by next week, we get sort of a down, an up, a down, an up, and a down. So let's say that's the next few days of trading. All of next week we get something like that. Well, at some point, guess what? This goes from a +1, meaning slightly bullish, down to a 0. By the way, I'll be updated on my phone that happened, because we'll get down to here and we'll cross below. And then after one or two lower highs, we will go from a +1 to a 0 down to a -1, which would probably be something to turn this to very bearish, which is a fancy pants way to say every economic piece of data suggests selling New Zealand dollar. But maybe the US dollar is weak and it goes up. Okay. But at some point, what makes most sense is in situations where this technical trend turns bearish, and I think we all agree this is not bearish yet, but when it does, there's no foundation to catch a fall, because economically speaking, Kiwi needs to go down. It's overvalued. You have to be smart enough to say, well, my team and I believe the New Zealand dollar is overvalued and we're waiting to sell it high. We're just identifying various prices in which we might sell it, and then we're looking for technical confirmation as to when to sell. But it's only a matter of what price and what time we will sell. With this level of trading, understand when you wake up in the morning, you know what you want to do. You feel like you have control because you do have control. Now you have a process. Hey, Quant, give me an update. What happened overnight? Okay? And then you, right? That's your associate. Then you meet with your technical analyst. Hey, analyst, grab your charts and get to my desk. All right, kiddo, what happened overnight? Well, after 7,500 charts, I've found 12 things that you might want to consider looking at. And so you could literally bring up every single trader's pattern that was seen. Remember, they're patterns. They're either a pattern or you're not updated. So there's 7,988 things that you should not look at because they're a waste of your time. Dude. Okay? Dude. All right, so of the 12, now what you could do is actually go to your chart, redraw the patterns, because it helps you analyze what the AI has seen. And then from that, you decide, well, what would you do? How would you analyze this chart? And you can agree or disagree. Or you say, like, I like the chart, but I'm not a bull, I'm a bear. So you're like, cool, good analysis, but I'll pass. Because I'll tell you what, it does things like this. It does things like this. Let me kind of analyze this a little bit, okay? So let's say we have a little more price, and it shows this in the past, and then it shows this in the past, okay? All right, let's say that's the channel. TradeRs is bias agnostic. So how do you trade a channel? Okay, well, you can buy at the bottom or you can sell at the top, right? Now, I wouldn't do that if I were me. But that's how you trade it, right? Up, down. It's linear regression, basically, following a slope of a mean. Now, if I were me, I would treat it somewhat different. I understand that price action, but I'm taking it further. And if I'm a bull, okay, I buy at the bottom, and I'm not going to sell at the top, and then I'd buy at the bottom again. So you have to be able to say, well, I'm a bull, so I only buy dips, and I'm going to try to let it run. I'm not going to buy. So TradeRs will tell you in an uptrend that there's a sell, because that is the pattern. Yeah, it's likely to come down to the bottom of the channel. Do you need to do that? I wouldn't. Now, maybe it's at a psych level, maybe it's at a pivot profit zone, and you expect the double top. Well, why wouldn't you just wait for it to see the double top and inform you? Well, that is how you should do it. So it's not going to think for you. It's just going to show you real patterns. And so if you go to the next step where you're like, okay, I want to buy it here, and then if it comes down here, I might want to buy it there, then you're filtering out the sells. Because you know how to trade a channel. If it's trending, you buy dips. You don't buy the bottom, sell the top, buy the bottom, sell the top, buy. That's not realistic. That's silly, in fact. So, but it's good to know that a pullback is happening. I would look at when TradeRs says down, but you're bullish, that it's a pullback and you love to buy pullbacks. So you still pull it up, but you don't sell. It's just telling you it is falling off the top of the resistance, and it'll probably fall back to the future support. So it'll actually draw it with yellow, and you'll get something like, cool. And I'm thinking, well, maybe I'll buy it tomorrow. Down today, up tomorrow. So you still have to filter it through. So you say, well, I'm in boss mode, so you'll pass on a lot of things. But that's how you're supposed to trade. Okay? So anyways, I'll put this back. Okay? So in this case, if I'm using TradeRs and QuantBox together, I can say, based on quantitative analysis, I'm a bear on Kiwi dollar. I don't care what happens today, tomorrow, next week. I don't care. I don't chase price like a dirty dog, okay, biting fleas on its buttocks. That's not me. So I wake up in the morning, and I say I'm a bear. And I will remain a bear as long as QuantBox is doing quantitative analysis for me. So I wake up in the morning. Hey, Quant, what are we doing on Kiwi? Bear. Got it. So then I go to my chart and it's up. So what do? Nothing. Okay? Being in cash is a position. Okay? But what happens if next week's down and the following week is down? And the technical trend goes from an uptrend to a downtrend. Game on, bro. I'm going to hit hard. I'm going to fire for effect. I'm going to take this down. Okay? Vacations canceled. We're not going to grandma's house, everybody. Forget it. I am selling kiwi. I'm eating lunch and dinner at my desk. Don't bother Papa. Papa's working. Okay? Do you see? You know when to hold them and know when to fold them. But you also know when to double down with work ethic. In that case, not doubling down on your lot size, but you're trading more, you're holding longer, and you're sleeping less because it's time to reap, because waiting is part of the sowing. Okay? When this is falling technically and you're fundamentally bearish, it's time to harvest. Time to get paid. And you know it. You know it logically, intelligently. I can prove it to you mathematically. And Imagine Traders is like, dude, did you see? Sell Kiwi Swissy, sell Kiwi dollars, sell Kiwi yens. And all of a sudden you're like, juice. Now you're just going through your charts, and wherever you look, you see technical analysis pointing down on a Kiwi. All of a sudden you build a whole portfolio of selling Kiwi. You're buying Aussie, you're buying CAD, you're buying dollar, you're buying Swissy, you're buying yen, whatever, dude. As long as it's got a bullish pattern, or in this case, a bearish Kiwi pattern on it, you take shots and you're building positions and you're letting it run because you have congruency technically as well as fundamentally on the charts and off the charts. Wow. Wow. And so that was Kiwi. What if you picked another one? You're like, what if you are doing yen pairs? Turn the yen pairs on. Do you know what direction you want to go on yen pairs? Are you a bull on yen or a bear on yen? Do you have an opinion? Okay? If you have an opinion, you know what to do. Bearish on a 30-minute. Bearish on a 15-minute. But what if you were not a bull on yen, but a bear on yen? Well, ignore that then. What about this one? 15 minutes ago, euro yen, butterfly Fibonacci pattern. So again, this is a momentum play. Butterfly Fibonacci pattern identified at 9 a.m. So yeah, 14 minutes ago. This pattern is still in the process of forming. Possible bullish price movement toward target levels, ranging from 164.31 to 165.31 within the next 10 hours. A, B, C, X support, buy it there and up. So notice there's two parts to this trade plan, and you can do you. Okay? C to X, there's a trade. But Traders is like, well, yeah, but what it likes better is this. So, is it helpful? Well, it depends if you're a bull or a bear. Okay, it depends if you're a bull or a bear. What do you want to do? Sell yen or buy yen? Is the intervention going to work? Is the intervention not going to work? Okay, and you go through your world filtering potential opportunities. ABC emerging pattern on pound yen 17 minutes ago, so same time as the other one. Different pattern slightly, similar but different. This pattern is still forming possible bullish price movement toward target levels ranging from 191.91, so we'll just say 192, to above 193 in the next 5 hours. So these are, what is this, 100 pips here, 100 pips there? Hey, pretty soon it starts to add up to real pips. So it's saying down, and look, since issuing it 17 minutes ago, or 18 minutes ago, do you see the red candle that has formed since the announcement? I can't highlight it. You see, like, it drew the C and said down to then up. Well, look, it's been down. It almost went down, 191.47. It looks like it got pretty close. So it's thinking probably in the next half an hour, there's a potential to get long at B. A, B, C, back down to B, but then up because it considers that ABCD as a reversal. And first wave up to here for 100 pips, but then probably followed by a higher low, higher high. So it would probably, if this worked out for you, then by Monday you'd get the next wave, and it would see it as a higher low, and it'll probably be drawing it as a trend. At that point, it'll have it as a channel. So if it went from here and then down to here with a bottom of here, then it'll probably move things over. Let me just make it slightly different. Then by tomorrow, so Monday, you would probably get some sort of pattern like this. And again, I'm telling you, if we imagine this, then Monday's trade is probably going to be down, but you're going to ignore it. And then later, it'll be up to the top, and you'll take that one. Okay? All you had to do is say you're interested in selling yen, which means buy pound yen. And now you wait for the technical analysis. Remember how you used to wait on the charts and you're like, do I buy now? Do I buy now? Do I buy now? What do I do? What do I do? What do I do? There's a machine that knows how to do technical analysis perfect. It doesn't make mistakes. It doesn't predict the future, but it doesn't make mistakes doing technical analysis. And it'll highlight everything and it'll show you what it's thinking. And then all you need to do is line up your thoughts with its thoughts. Because if you are a bull and it says, hey, boss, I just noticed a pound yen bullish pattern on a 15-minute chart, it is correct. It did happen. And you're already a bull. What do you think, Haas? Are you going to get in or are you going to stare at it all day? You're going to change how you trade radically. And one of the things I would do wrong, or not wrong, but one of the things that plagued my trading is I stare at this all day, waiting and waiting and waiting to get my trade set up. And then I don't realize Euro took off without me. And I'm sitting here waiting for this A, B, C, D, and then a higher high, and then a higher low, and I buy the dip. So to me, that's a 1, 2, 3 pattern. So I'm waiting for this pattern. I'm in that pattern. I'm staring, but it's not quite happening, right? So I buy this dip, and we kind of get high, but not a higher high, and then it kind of fizzles. And I'm sitting there waiting for it to truly turn bullish for me to add to my position. And what I don't realize is as I'm sitting there staring and my eyeballs are growing dry like a Saharan desert, Euro took off without me. Euro took my pips. In this case, I can get the update and all of a sudden Tradar says, bro, bullish pattern on euro yen. I'm like, really? Oh, and I switch over there. Oh my God, yes. And I'm less likely to miss it. I have a radar. This is why I call it radar. I'm searching for all threats and opportunities. Now, if it's against my fundamental bias, it's a threat. Is it wrong? No. Do I need to be worried about this threat? Do I need to address the fact I'm a bull and there's bearish trade plans across the board? Yes. There might be an opportunity for me to buy a dip, but there might be a threat where that market reverses on me. So it's good to know, like, oh my goodness. But you notice how I just filter out all the noise? I'm like, just show me the things I'm interested in. If you can do that, and QuantBox helps you to make that decision. For example, you log into QuantBox, is the first thing you see. It says bullish. Oh, it just switched. Okay, it just updated. Bullish German stock market, bullish Euro Kiwi, bullish Aussie Kiwi, bullish Euro CAD, bearish Kiwi Swissy, bearish CAD Swissy, bearish CAD Yen, bearish Kiwi Dollar, bearish Aussie Swiss franc. See, what I could do from here is say, as a trader, I'm only going to look at these pairs right now. That's it. Or you try to find the pattern. Clearly, Kiwi is weak. Okay, but CAD is also quite weak. So you can make a different determination. Okay, well, maybe today I'm interested in doing CAD. Or selling CAD specifically. How's CAD doing today? And no real trend going on right now. You can see everything is across the board. We can look at our risk gauges. For buying CAD, you want risk on. For selling CAD, you might want risk off. And we have on, and off. So that's interesting. There is a comeback going on. Okay, great. So the trend might be changing here, back to risk on. Because we're looking at volatility and yields and the dollar and the yen and gold and the stock market. And we're analyzing them on 3 different time frames and using correlation to discern risk on or risk off. Cool, that's really smart. Okay. And we got our news and all that kind of stuff. Okay. Cool. So then we can go to our CAD and say, all right, I'm interested today, and I'm interested in selling CAD. Aussie CAD, that might be an up. No. Euro CAD, that could be an up. Nope. USD CAD, that might be what, an up? Yeah. Nope. Cool. Save it and forget it. Okay. Buy CAD. No, not interested. Euro CAD up. Ooh. And there's a great example of that channel I was telling you about. Okay. 26 minutes ago, and before the market turned green, 26 minutes ago, up. Now notice 15 minutes ago, the market turned green. I don't know if you can see that. So this was 20 minutes before the market started going up. So clearly it was right. Cool. Do I like this trade? Yeah. Yeah. There we go. Am I interested in this? No, I'll pass on that. Okay, so on and so forth. So you're like, ooh la la, Euro CAD, huh? Euro. Where's my kitty cat? Did I click the right one? Yeah. Euro CAD. So again, 26 minutes ago. So that was around here. Okay. Traders said, hey, bro. Okay. Up. That's the wrong one. Okay. Okay, so if you had paid attention, if you were already bullish on EuroCAD, which you would have been because QuantBox has been showing that trade for, I don't know, a week. Okay, I can go back and show you exactly when, but a while. You would have been into this whole idea of buying it low. Right? Do you agree? If you're already bullish, buying low makes sense, doesn't it? So you get a bottom and a top, and then you do a fib or something. Okay? Cool. Then what? And then right here, TradeR says up. Where? To the top of the channel. Yeah, that's a pattern, but notice it waited for the confirmation. So you could have been there a lot sooner than 26 minutes. Remember that 26 minutes ago. 26! Okay? So you could still have a chance. But you see how to use it? Are those trades on TradeRs or QuantBox? I don't know. TradeRs, yeah. Yeah. Yeah, they're on two different machines running two different AIs. They don't talk to each other. They don't use the same technology. They don't use the same front end. There's nothing similar between the two. Yeah. Cool. So you're going to buy a dip? Well, that's for you to decide on. All right, stock market open. Ding, 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 ding. So if you're worried about, like, what should I look for today in the stock market? Oh, you mean these ones? So here's the S&P 500. Here's the DAX. Here's the Dow. Okay. These are all different time frames, different trade plans. Nikkei, FTSE. Cool, right? Or what about individual stocks? Anybody here trade the stock market? Nike, Apple, Amazon, Nvidia, Moderna. So there's a good way to do it. Just trying to find something for you. Just trying to find something that might help. No, I'm not going to be able to. All right. Okay, one of the things Big Perm says, no, these are not indices. I don't trade individual stocks, but I do trade indices. Well, SPY, yes, so that's an indice. Does it do Intel? Only if Intel produces a pattern, of course. And let's go to page 2. If not, I'll show you specifically. Oh. I didn't see an Intel, but we'll go to settings. First of all, I'll turn all 4X back on. And does it do Intel? Yes. Let's see if there are any plans. No, there just isn't a plan. Meaning there's no pattern right now on any time frame on Intel. But yeah, it does. Okay. So imagine what can go on here. Apple can head up today based on that dumb news. Another sign that their Apple is over. So it'll go up for a couple more years, but it's dead. 176 up. And then if it breaks that, it'll produce another bullish pattern even higher. Okay. Look at some of these patterns. 3 drive emerging. It's beautiful, right? I don't prefer those types of trades. I prefer just simple breakout and then up or continuation, right? Yeah. Cool. Hey, that's me. Funny thing is, this building I'm leaning on is the FXCM office in New York City. I think it was Water Street. Cool, right? Anyways, I cut a check 2 days ago, I think it was. 6 figures. Another 6 figures invested into TradeRs. So I'm asking you to join us for cheap. It's cheap. Dude, I just put in another 6 figures. Wait, is it 6 figures or 5 figures? 5 figures, sorry. 5 figures. It wasn't $100,000. Okay? Okay? But I could have bought a car, a used car, but I could have bought a car. Instead, I invested into you. Remember, it's learning. It's watching and learning. It's getting smarter every day. Okay? Yeah, maybe. Just enough is all that is really needed. But yeah. But anyways, check it out. This is real. It's happening. It's the future. You're in or you're out. And I can't believe $80 is going to hold you back from your destiny. So you're either all in with, using artificial intelligence to help you make better trading decisions, or you're just not. You're just not into it. You don't get it. You don't like it. You're afraid of it. You don't believe in it. Whatever the system, but after what I've just shown you, if you don't get it, well, I suppose I have to apologize. Cool, right? Cool beans. So, uh-oh, there's an old trade there. I got to be careful. All right. All right. Well, I have to go soon. I have another board meeting for a nonprofit. I'm being elected to the board of directors, and then given the title of fund manager for in managing their endowment. At 10, I don't know. I don't know if I can. Probably not. But we can look at it. And do you know what you see here? Big perm, what do you see? Oh, I'm really sorry to hear that, Hoodoo. My condolences to you and your family. So big perm, what Sonars does, and again, you have to appreciate this. Sonars looks at every one of these patterns, or every one of these events. This is just today. And it looks at all of these in the future, every single one of them. Okay? And it watches a bare minimum 2 hours before and 2 hours after each one of these events. It's actually more than that. It looks at before and after every one of these news events in the past, going back a minimum of 1 year. Dude, that is an amazing amount of candlestick analysis. And it asks one very basic question. Is there volatility? And as you might expect, these 1 and 2 stars, they usually don't produce any volatility. Now, sometimes the 2-star does. Sometimes, most of the time the 3-star does, but you don't know unless you analyze. You would expect 3 stars gives you volatility, but it's not necessarily true. What you expect and what happens are often two different things. So, again, quantitatively, Tradars goes through and analyzes all of these events. Does it create volatility, yes or no? If the answer is yes, it goes to the next step. If yes, if volatility, then is there a repeatable pattern, and if so, on what time frames? So, when we go to Sonars, okay, is ISM services important? Yes. We know it's important. Does it produce a repeatable pattern inside the volatility? No. Skip it. Well, I trade all day, every day, Mohammed. So, yes. Okay. I managed hedge funds. I consult hedge funds. I now oversee 3 endowments for nonprofit organizations. I love what I do, my friend. Am I a trader? Yes. Am I an investor? Yes. Do I manage a pension fund and construct portfolios? Yes. Okay. But looking at the analysis, guys, skip it. Oh, is that right? Yeah. Okay. Sometimes it's more of a heckling type question. People often don't like that I talk so much and not just put you into trades. Well, I don't do that. So, because that's not a boss move anyways, right? Hey, YouTuber, tell me how to invest my money. Really? What a dumb thing. Right? What a dumb thing. You listen to a YouTuber and then risk your money? Oh, well, this YouTuber told me to buy euro dollar. Buy, buy, buy. Go, go, go. Really? That's how you work? What a sucker. But lots of people want that. Good. I'm not interested in working with them. I don't even like the attitude. But for those that want to do the work, then I have to show you how to do the work. Yeah, Hoodoo. Well, that's my... that's my my edge, my alpha, or what makes me unique. How many YouTubers have a master's degree from Harvard in the subject matter that we talk about? Finance, economics, and how many have a minimum of 20 years of experience? How many have worked with George Soros on a board of directors? All of a sudden, none. There's just none. Okay, so my value is, I'm not going to say, go, 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 buy, 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 get in the euro. Oh, we're all making money. Look, we made 22 pips. We're so good. Well, that's boring and childish, in my opinion. So it's just not what I do. Right? So, yeah. So sometimes that's a heckle when somebody says, am I a real trader? Wayne, you don't really trade. Okay, well, cool. Whatever, dude. Whatever, bro. Yeah, so this is the useful information going back to, who said it? Oh, Big Perm. Hey, can you stick around for ISM services? No, actually I can't. I do have to go. I don't have much time to prepare more. I have a lot to do. Like, for example, I met with the finance subcommittee for this nonprofit yesterday in preparation for the board meeting, because they're putting me in the finance subcommittee because I'm managing their endowments, right? Okay, cool. And I said, well, be careful, because the minute you elect me and I'm on the board, I said, I'm going to stir the pot. And they're like, really? I'm like, yeah, I'm going to do a complete audit on all your endowments. And I'm going to start with pulling all the paperwork, all the legal work, all your documents, all your procedures. I'm going to go through every single one. Then I'm going to meet with the firm, the big Wall Street organization that holds custody of the funds and then holds the investments, right? And I'm going to meet with that manager, and I'm going to check their credentials, and then I'm going to look at the portfolio itself, and I'm going to analyze it and see if it actually matches the policies and procedures set forth in some of these endowments, which, a couple of these endowments are like 30 years old. So I'm like, yeah, but I don't know if what you're doing matches the paperwork from 30 years ago. When was it updated? How has it been updated? Are the mandates fulfilling the mission of these funds, right? And I'm like, I'm going to just tear everything down and I'm going to look at everything. I'm going to rip it all up and double and triple check that everything is legit. So anyways, this is what I'm doing later today. But going back to, should I stay and do ISM? Well, yes, it's a big event. Yes, it's an important event. Yes, the economic data would likely have an impact on QuantBox. But as far as volatility with a reliable pattern, the quantitative analysis of ISM services in all scenarios of greater than, equal to, and less than over time have produced no reliable response by the market. So my answer to you is no, it's not worth my time. Right on, Hoodoo. Yeah, he's an economist. I remember I'm a trader first, and being a trader and then learning fundamentals as a trader, which I spent years on. Then the next thing is I decided to, invest, well over $100,000 in my education to know economics and fundamentals better. Right? Again, so that's why when I say, like, the way I price some of these services, it's $80 a month. If that holds you back, like, dude, I spent just on textbooks, I've spent probably $10,000 on economic textbooks. And I'm like, dude, $80 a month to radically change and improve the way you trade, and you don't have that, I don't know if I can help you. Or if you don't see the benefit. Like, a few people have logged in, tried it, paid the 79 months, tried it for about a month and quit. I'm like, holy crap. It's alarming to me that I'm letting these people down because they clearly don't get it, and it's my fault. Right? It's my fault. So, oh my gosh. So if there's millions of dollars invested here and $79 is too much, like, I don't, my brain melts. I just don't get it. And then I realize it's my fault that you don't get it. And so I'm going to, in the next week or two, make some massive, huge announcements that will radically help you use TradeRs and QuantBox. Radically. Like, no one should ever quit. Ever. It should have, well, you don't know. That's the thing, right? So like, Mylan, like, why is it my fault? Well, if someone logs in and they look at this and they're like, okay, I'm gonna take this trade, I'm gonna take that trade. Oh, it doesn't work, and then they leave. Then it's my fault because they don't know what the frick they're doing, and that's my problem. I didn't create the resource to show them how to use it properly, because if you know how to use it properly, it's absolutely stunning how good this is. And I'm not selling my own, I mean, I've analyzed it with my own techniques that I've personally honed over 20 years, and I'm startled how good it is. And that is the God's honest truth. I didn't think it'd be this good. I thought it would be helpful. I thought it'd push you in the right direction. It's startling how good it is. And so if someone joins, I can do it for you personally. I charge $500 an hour. Or you can pay $79 a month and it'll do, I can't do 7,500 charts. Like, seriously, it's extraordinary use of technology. And so if someone leaves, I'm like, holy crap, I've just done someone a disservice. They looked around. It was overwhelming. It was confusing. They took a couple of stupid trades because, well, traders told you. No, that's not how it works. Okay? So I need to save those souls. I don't understand anyone that would sign up and then quit. It doesn't make sense to me. It really doesn't. Okay? So that's what I mean by that. So I'm addressing that issue. I'm apologizing first and foremost for letting you down, but value, additional value is coming your way. In particular, like at TradeRs, okay, for the Plus program. It has all the features. I'm going to add to this and give you some amazing stuff. And there's more upgrades even coming into the future, which are in development. But the stuff about to be released and done for you is going to expand on this exponentially. And you will know, you will have support and resources and training on being an absolute total beast with technical analysis. Yeah, a beast. And the price stays the same. Yeah. Yeah. So I really got to go. I got this board meeting. I really got to go. I'm changing the world one life at a time. In this case, well, this organization is one that I've been contributing to for about 30 years. 30 years? How old am I? 30 years? Yeah, almost. Yeah. My God, 30 years. So 30 years ago, I was elected to the board of directors of the main corporation, and now this is the board of directors for the supportive one and the ones that oversee the endowments. So anyways, look at me. I manage endowments. Peace on earth. May the pips be with you. May your profits be above average. Remember, you want Traders Way as your broker. They're an ECN. They're the one I recommend. Investor Bootcamp, quantbox.co, traders.co. I'm telling you, not a sales pitch. You need to incorporate the training, the fundamental analysis, and the technical analysis, and run your personal trading account like it's a professional dealing desk. I want you to act as if you have $10 billion and a staff supporting your decision-making process. That's how I want you to start trading and behaving and thinking, and I know for a fact you can do it. And if you join, I will not let you down. Give me some time, be patient, be disciplined, and we'll get this. This is your destiny. These tools I've made are amazing. There's nothing now to stop you from achieving your destiny and your greatness, except you quit. And that scares the crap out of me. So I'll see you around. I love you, FX Street. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. I'll see you around.